practically, other than McDonald's and KFC, we're working with all the QSR and CDR companies. 2022, we even started a small, plant, which we thought which we started to manufacture value-added mock meats, as we call them, which are like we call them plant-based mock meat products. So in that we were producing for all the brands which are there. We were producing for Blue Tribe, Plant Away, PFC, Chatha. So some of that model didn't really take off very well. It didn't take off worldwide, as you would be aware. The plant-based business actually didn't, come up the way the world thought it would come up, based on sustainability and other things which actually didn't work out. So now we are producing vegetarian products in that plant. So coming into the vegetarian segment, we thought that we need to add more value, to our QSR customers by bringing in a more range of products, and also get into the export business and get into the B2C business as well. So that's the reason we raised funds through an IPO. We are setting up a plant for flatbreads and frozen to fryer products. So flatbreads, like we're doing, we will be producing tortillas like 10,000 pieces an hour. We'll be doing Malabari paratha, 9,000 pieces an hour. Certain very unique kind of a paratha, which I won't disclose as of now, is again 9,000 pieces an hour. Plus a large frozen to fryer products where we want to, rope in the burger chains as well in the QSR segment. So that's the broad, know-how about the company, Dhruv.
Got it. Sir. So the lion's share of the business is towards the non-vegetarian products, but I think right now you're also catering towards the vegetarian products. So is there any margin differential like in these two particular segments, like non-veg versus veg?
Dhruv, so vegetarian we're doing in a very small way at the moment, because it was a very small plant which we set up with a capacity of 6 metric tons per day. So on margin difference, no, there is not too much of a difference in the margin. The margin remains the same. In fact, in the business we are proposing to set up, the margins would be higher than the non-vegetarian segment.
And as far as I read in the con call, you all are looking more towards the export market from the new plant.
Export, QSR, and the B2C segment. The three segments is what we're looking at.
And when can we expect the commercialization of the new plant?
Dhruv, we should be in a position to start our commercial trials by April 25, and we should give it another 3 months, to do the semi-commercial trials. So let's say by July we should be in commercial production. July 25.
And what could be the incremental revenue in terms of absolute, as you said, 6,000 metric tons? As in, if we want to quantify that, then that would turn around to how much incremental revenues?
Incremental should be once we have full capacity, Dhruv, it should be 2 times of what we are doing now. What we'll do this financial year, more than this. So it should be like we should be doing like 175 crores incremental from that unit, from the new unit. Once we are at 100% capacity. So the total capacity we are setting up is around 14,000 metric tons annually.
14,000. Got it.
Just to since we are on this, sir, I was just reading the previous con call that we had. So I read that you can do around 17,000 metric ton from that plant and can get 210 crores kind of revenue from that. So is that the figure that we're looking for? Or?
17,000 metric tons, Anurag. Yes, but we have we were also trying to do naan breads in that plant, which we wanted to, come to a automatic line. But the automatic lines are been, we've done a lot of research. They're very expensive, and manually we don't want to do it. So the idea was first that we will do it manual, like a lot of other people are doing. So we won't be doing manual naan breads. So that's something we've taken out. So the capacity is like now 13.5 to 14,000 metric tons.
And total outlay that will be there for this plant?
Sorry?
Total investment that would be undertaken for this plant?
Investment will be between 40 to 44 crores, Anurag.
Okay, so the investment amount remains the same, but you're saying the capacity would be sort of around 13,000-14,000. Is the understanding correct?
So we just taken out the manual non production, Anurag. So that was not a very big investment.
Okay.
So that is something, because it's very labor intensive. It's very, very labor intensive. So that's something we decided not to get into.
Okay.
Usually, I mean, since we're on this, usually, your asset turns have not increased historically, if I've seen, not gone over 2.5 times. But now you're saying 175 crores with a capex of 44, that comes out to like 4 times close to asset turn. So is it because of the change in the product mix or upgradation of technology? How is it that will you do 4 times?
It's a totally different product mix, Sudhi. So it's a high capacity, production lines what we're getting into.
And what is the margin for this kind of products?
Margins would be, we're talking of approximately 30% to 35% gross.
So, okay. Also, I just wanted to go to the history a little bit more. If I see 2017 to 19, you had done, 2018 and 19, you had done gross margins of 33%, and you all managed to do EBITDA margins of 11-12%, and that has not been replicated ever since. So I wanted to know what was it that you all were doing then, and is 11-12% margins can be doable with the non-veg products itself, barring the new products?
11-12% EBITDA margins would be slightly challenging now, but yes, I mean 8 to 10% EBITDA margins is what we can do in the non-vegetarian.
So what was it that you all did back then that got you these kind of margins?
It is not. See, it all depends on. So we are dealing with multiple QSRs, right? And when you're dealing with multiple QSRs, you're dealing with multiple products. Okay. And QSR keeps improvising on their menus. Okay. So I mean, it keeps happening. Like we had a few products which were high margin products which are not there anymore in the menu. So these things keep happening. These things. So mainly the reason for the one was the COVID coming in, our raw material pricing escalating after COVID. Things settled down, but yes, a lot. I mean, some of the high margin products were taken off from the menu.
Got it. And now if I like move on to the customers, I see like Jubilant Foodworks, for example, like Domino's, it has gone from like 37 to 60 crores. And in the last 2 years, it has been 60-61 crores. So incremental, is this kind of the orders that you're seeing, like 60 crores annually? Is this the peak that you've reached with Domino's? And what kind of other supplier base do they have apart from you?
That is something the QSR normally does. I mean, looking at their increase in outlet base, looking at the increase in the geographical, store opening. So yes, they do go into multiple vendor base, and so that is normal trend with the QSR. They always don't want to depend too much on one vendor, which is very well accepted, because yes, as they grow, regional suppliers also come up. Dependency has to be limited. So that's the reason.
So you would be like what, around 5% of the or Domino's supplier base of the meat
No,
procurement?
not 5. No, not 5%. We would be around 50%.
It would be around 50%. And who would be the other, like, is it two-player market? Is it like multiple player market?
So normally it is 2 to 3 players market. So
Okay. Okay. So the opportunity size doesn't seem large with QSRs. Like if you're 60 crores is like 50%. So peak would be like 200 crores kind of an opportunity with say like Jubilant or Subway. I believe KFC's and McDonald's would be higher because of bigger chicken in their menu. But for semi QSR, so if Jubilant peaks at 200, other QSRs would peak, Blue Tokai and everyone would peak much lower than 200, right?
much lower. Yes, much lower.
So how many customers addition do we have in the pipeline?
It's an ongoing process. We have, so that's actually what we do. So we have at least like Blue Tokai, Third Wave were acquired this year, right? Chinese Walk is another account which was acquired, growing at a very fast pace. Taco Bell was acquired last year. So we are in the process of acquiring almost 6 to 7 more customers, which we call them as medium-sized QSR. So customer acquisition is a continuous process. So when we're talking of the vegetarian segment, so we have not tapped into the burger market as well as of now. We work with Burger King, obviously, but we don't have a large burger line. So we're not doing the fried burgers for them. We're just doing a couple of sides for them. Plus, I mean, that's a very large market. That's what we intend getting into now.
Got it. I mean, if anyone has other questions, otherwise I'll just.
Yeah, sir, in terms of burgers, so I read that that line is quite capital intensive,
Yes.
setting up a patty line. So
Exactly.
how are the economies different in a burger line as compared to the other products that we have?
Anurag, economies in the terms of
In terms of, I mean, sir, how does the math work? What is the for a plant like what kind of investment
Vista.
would be required for this, and what would be the payback period? What could be the margins in this? The numbers basically related to a patty plant.
So Anurag, margins comparatively are lower if we look at that, but then your overheads are also much lower in a burger line. So the kind of production line we are into as of now is more overhead intensive in terms of manpower. But when you look at a burger line, maybe the margins comparatively are lower, but then your direct expenses are also much lower, and the production is much higher with much lower overheads.
But in terms of margins, sir, how does it work out?
That is something, Anurag, we'll have to look into. I really can't put my thumb on that at the moment.
Okay. But in the new plant that you're setting up right now, there is one line that you're putting up for patty, right?
That's for vegetarian patties.
That's for vegetarian patty. Okay, so for the vegetarian and non-veg patty, they're quite different in terms of the investments that are required.
No, investment is the same. It's the same. It's the same.
Okay.
Yeah, investment is the same.
Okay. In terms of customers, sir, I wanted to understand. So when you make your products, it's primarily order based, right? I mean, you get projections from your customers. What's the frequency of these projections? Is it, I mean, a weekly numbers that they give you, monthly, or how does it work out?
So most of the times, Anurag, majority of the customers give us quarterly projections, and but the quarterly projections are fine-tuned every month.
Okay. Okay.
Yeah.
So, quarterly, I think is a small period, but actually wanted to understand. I mean, are you sort of getting a sense on the kind of growth that these big players are expecting? Any kind of feedback or anything that you have received from them in terms of the growth?
feedback we keep getting regularly from them, or I mean,
in terms of the kind of growth that these players are expecting? I mean, I'm sure these guys would like to keep you in the loop in terms of
yeah, they do. Yes, they do.
Yeah,
They
yeah.
do.
So what kind of growth are these people expecting going forward?
Anurag, in terms of growth, all we have shared is number of stores which are going to be opened. But in terms of our volumes being picked up, I mean, there are no definite projections on that. So what we are updated is on how many number of stores are going to be opened every year.
Okay, and the kind of number of stores that they are going to open, is there a number that you can sort of give us on that?
Sorry?
Can a number be given to us in terms of number of stores that they're going to go set up?
Anurag, I am not
Percentage
supposed
term
to,
or something?
I'm not supposed to share that, Anurag.
Okay.
Sir,
I had
in the
questions.
annual report,
No, go ahead.
yeah. So in the annual report that we have said that there are plans that we could add the Yum Group, the ADF, and the Tata Group to the clientele list. So could you share
So Yum
some
is,
insights on that?
Dhruv, Yum is already there. So when we say Taco Bell, so Taco Bell is Yum.
Yes.
Yeah.
And apart from that, Tata Group and ADF Group has also been mentioned. So, what plans are there for us? Like, what kind of synergies we are thinking when we are saying that Tata Group could be a clientele? So, could you share some
So Dhruv,
insights on that?
we are already, I mean, see, some of these companies are large companies. So we already supplying some products to them, which are becoming part of an ingredient to the final product they're going to make. So let's see how it takes off, how they further grow on that.
Okay. And I think previously, 5-6 years back, we were also working with ITC, if I'm not wrong. So,
Not 5-6 years, not 5-6 years back, it was 14 years back.
okay, sorry. So we were working with ITC in the gravy part.
Yes, we were making the Kitchens of India brand for them. We were producing that.
So is there a possibility to add that particular segment as well and collaborate with the likes of ITC again, or how is the market like to collaborate with ITC currently? Do we see any path over there?
We've not explored that, Dhruv. On the Kitchens of India brand, we worked with them for almost 7 to 8 years. But somehow the volumes were not actually picking up, not only for ITC. I mean, if you are aware of that time, there was the whole ready-to-eat segment, the likes of MTR, I mean, Kohinoor Foods. Many players came in, but somehow that segment didn't take off, Dhruv.
Okay, got it. I'll come
Kitchens
back
of
in the
India
queue.
brand is still there. Kitchens of India brand is still there, but if you go to the market, you still see it, but it's got a very, very small presence, which is being done by ITC itself somewhere in UP, I think. Yeah.
So I just
Okay.
want to talk about a little bit about the customer approval process since he brought it up. So how long does it take to get someone like a Domino's on board and for them to accept your product? And even for these new customers, what is like the gestation period? And is it very different when you go to the export market? Do you need like additional approvals or stuff like that?
So the export market is something which we will explore. One for the export market is a certification. You have to be BRC certified. For our existing plant, we are BRC certified. Plus, we will be BRC certified for a new plant as well. So BRC certification is a standard certification, food safety certification required and accepted by almost all the countries. And then obviously, when you want to export to US, you'll have to get the FDA approval. You want to go to Middle East, you will have to do their municipal corporation approvals. So it's going to, when we start, you will have to go to PRC, becomes a standard umbrella food safety certification. And then as whichever country you go to, you will have to get the local approvals. Like we got ourselves FDA approval, FDA approved for the vegetarian plant. So those approvals are done online and we are still FDA approved. So those are the normal approvals which are required. Now coming to onboarding a new customer, onboarding a product is different, but when we're onboarding a new customer, it depends. So some of the large MNCs might take 6 months. We have to go through a lot of documentation. We have to go through plant approvals, their own internal plant approvals, third-party audits. So it can take as long as 6 months. And with some customers, it's like, you're onboarded in a couple of months. So basically, it's documentation and the plant audits and approvals. What happens? Food safety approvals is what everybody goes through, and then it's signing the non-disclosure agreements and their parent, the main principal group of approving all the documentation. So it normally does take anywhere between 3 to 6 months.
Got it. And what is the working capital cycle like for for the MNC players? So how does the inventory rotate? Because I see your working capital days are like very less, like 20 to 30 days. So is that the nature of the business, or do you do something differently?
Valerie, can you explain that better?
So we receive the money from the customers in 30 to 35 days. And our inventory period is including the raw material, the FG is around 30 days of the sales per month. And creditors are around 45 days. So a net working capital of around 15 to 20 days is required normally.
So even with the MNCs,
no, they're good in paying.
Oh, okay.
Yeah.
Okay. And if I go back to like the capex part of the question, you said 175 crores, 4 times asset on. I'm assuming 10 to 11% margins in that. Is my assumption correct over there?
The new plant?
Yeah.
Should be, I think we'll better that.
Right. So with that, let's assume 10 to 11%, you're coming at a 30% ROCE, incremental ROCE kind of business with similar 25 to 30 days of working capital, as opposed to you have never done over 25% of ROCEs. In the current plant, is it possible to do those kind of ROCEs, or just the product mix is getting you all of this incremental returns?
So the ROC, since with the new project, since we have fixed asset turnover ratio is more, as you have rightly said earlier also. So when turnover is more in due to the less capex,
No, I
it is 10
understand.
to increase. But
I'm trying to
in the
understand.
existing unit,
Sorry, I'm just trying to understand if the non-veg part of the business, if you do some higher margin products like you all were doing earlier.
Yeah, definitely. Then it will.
Yeah.
That's linked to PAT, so it will definitely.
So do you have any kind of those products in the pipeline or something?
We do. Yes.
And like, is it coming 1 year, 2 years down the line, kind of a thing? If you could just.
No, it should come. It should come 6 months down the line.
Right.
Yeah.
So you could end 25, 26 with 12% margins, 12, 13% margins combined with everything.
We could, yes.
Got it.
So
it's not
one
could,
question that
we should.
Yeah.
So
Yeah,
although we have a long-standing relationship with, suppose, Jubilant, Domino's, Subway, but could there be a possibility that they start having their in-house manufacturing, or I just wanted to understand the barrier to entry. A new player coming in, could there be any kind of disruption on that front?
Dhruv, Jubilant already is doing an in-house production. If you're aware, they've
Exactly.
already set up
Yes.
a facility in Bangalore.
Yes.
Yes.
So does it
So, but
affect? Yeah. Sorry.
no, Dhruv. So it was a very clear understanding between us and Jubilant, Dhruv. So I mean that is what I appreciate about them. This thing was not like hidden from us, or this thing was not like we were not taken into the loop. So I mean, what was finalized between us and Jubilant. So mainly, all the other vendors have been suspended. So it is only Chatha Foods and Jubilant now, and with a commitment from Jubilant on a 30 to 35% business of the total volume.
Which is 60 crores?
Sorry,
Which is 60 crores?
to be
Or could be
see,
more, because if you're saying 60 less
it,
actually.
no, it could be more. Should be it could be more because see, like even this year, like you have to understand it's an ongoing process. Like even this year, a lot of the old products what we were doing have been or the 60-70% of the volume has been shifted to the Bangalore plant, but a lot of new products have been added, which we are doing totally. Right. So with QSR, I mean, all the time new products keep getting added, new ranges keep getting added. Popeyes is something which we are doing for them for North. So it should end at 60 crores plus, I think.
Got it. And the other thing, the plant-based and the vegetarian, manufacturing facilities at 20% utilizations. Is it fungible? Because the realizations have also dropped that production pickup. One, is it fungible? And how will you sweat that asset?
So that total assets will shift to a new facility.
Okay.
Yep.
Got it.
And as far as capex is
See,
concerned,
See, this facility should be just to explain a little bit more technical to you. We had set up a burger line, but working for burgers with a large QSR needs slightly more equipment added to it, right? And with the volumes they want, there is something called a spiral freezer, which is a prerequisite from them. So this plant was a small plant set up for small capacities. We didn't actually have the space to put up the spiral freezer in this facility. So this line with some additional equipments which will enhance the capacity to almost 3 to 4 times, and a spiral freezer coming in is where this whole asset will is fungible. It will shift to the new facility. And this facility, we will expand our chicken facility into this. So we have some very interesting proposals coming up from some new customers, which we cannot share at the moment. So we will definitely need to increase our area for the chicken processing as well.
Got it. And how difficult is it? This is just like industry purpose, but how difficult is it to onboard, say, a McDonald's?
Maybe I really don't know. We've never explored that. I think it'll be very difficult.
Got it. Because I thought like the closest second would be Jubilant to onboard. And if you've done that, I mean,
Also, be onboarding McDonald's is not in terms of any other thing, but in terms that McDonald's uh, works with OSI worldwide. So I mean, so McDonald's has a strategic tie-up with OSI, which is Vista Foods in India.
got it. Okay.
Yeah.
Thank you.
so right now we have the capex model in place, but
Yeah.
going forward, could there be a possibility that we outsource the capacity, as in we like outsource the capacity and thereby increase our margins, like without relying a lot on heavy capex? Could we like do that in the future, or we, because of the qualities, like we want to have the best quality, I presume, because of the best clients you'll have? So what would be the future roadmap?
Dhruv, that is one bridge we will cross as it comes. Uh, when it comes to working with the QSR, I don't think we will be outsourcing anything. But for export markets, once we start exports, there could be some products which we might have to bring it into the basket. So we are not really like, closed on that thought of outsourcing.
Got it. Yeah. And so, as far as clients are concerned, we are working with the biggest players right now. But if we start working with the smaller QSR players or cater to the Horeca industry, do we think that we could squeeze a little bit higher margin than the players that we are currently catering to?
We're already doing that, Dhruv. We're already expanding that market. Our next year focus is to bring in a lot of small and medium QSR. Products are being developed to suit their requirements. That is exactly what we're working towards.
So that is
Because
kind of value accretive.
Yeah. Because see, if you look at the QSR industry, the local players are not doing too bad. In fact, I would say they're doing pretty good. The local startups are doing pretty good. And we've without naming, we've had some very, very good experiences with a few local QSRs who started very small with us. And as on date, they're like 40-50 tons requirements, 40-50 metric ton requirement per month. Starting at a 1.5 metric ton requirement per month, they have grown to like a 50 metric ton requirement per month of a single product. So that has been a big eye opener for us. We are already in dialogue with a lot of startups. I wouldn't say like 1 store, 2 store startups, but there are a lot of startups which have reached around 20 stores, 25 store, 30 store kind of a business, both in burgers, pizzas, wraps. Yes. And one interesting development we've done is we even put it up on the BSC. So we have even ventured into the dessert segment. So there is something called as a Choco Empanada, what we're giving to Taco Bell. It's doing okay. And so it was our product. We developed it on our own. It's our IP. So we had an agreement with Taco Bell not to launch it 2 months, only after 2 months of their launch. So we are going to launch that also. So that is another inroad we want to make into the smaller QSR on the dessert part.
And as far as margins are concerned, can we assume a 1.5 to 2% extra margins from these smaller players? As in, if we start catering to them on a larger basis?
I would say slightly more.
Okay.
Yeah. Because what we do for them is not customized products. So what we do for them is our own IP, our own products, off-the-shelf products, what we call them. So margins would be better.
And as far as export market is concerned, the white label process that you all are going to follow, what could be the margins over there, like when we do white labeling in the export market?
Bro, it's too early for me to talk about that. It's too early. We have something in our mind, but it's too early because, I think by December, January is the time when we'll start talking to customers. We've had soft discussions on the lines we are setting up with large exporters. But when it comes to margins, that is something we still haven't toyed with them because we are still in the process of our own R&D and research and product development. So we're in the process of doing a product development. Like we already developed a Malabari paratha for which we're setting a line. We're working on the tortillas now. So we're not exactly sure of our costings to talk about margin as of now.
Got it. So April 25, the new plant commercializes and
semi-commercializes, Dhruv, what we call them as semi-commercial trials. So which is not for sale. It is just in-house semi-commercial trials.
So by end of FY26, like next
by July, Dhruv, by July 25, we should be entering commercial production.
And how much time does it typically take to take your plant to a capacity utilization of around 50-60%?
To do it by the end of 26.
Fair enough.
Yeah.
Got it.
Well, these are not very difficult products to sell. I mean, we're quite hopeful. There's a big demand for tortillas. It's a very growing demand. There's a very big demand for Malabari paratha, both in retail and export and the QSR market. So we think we can do a quick turnaround. Plus our frozen to fryer line, we're very confident once we have the IQF and the spiral freezer in place, we should be able to onboard the burger chains as well.
So by end of FY26, we could add at least 100 crores to the top line if 175 crores was the peak and 50-60% if we utilize.
We intend not 100 crores, Dhruv, because see, even if we reach a 50% capacity, we will just have a sale of 7 to 8 months, because the first 3 months,
Yes.
I don't think there will be any sale we'll be doing.
Got it.
Yeah.
Got
A
it.
sale should only start in July, although we would love to do it earlier. But we're targeting first 3 months as all the semi-commercial trials, because we're buying some very large lines. We are not familiar with those lines. We're not familiar with bread, to be honest. So we want to give ourselves at least 3 months to get familiar with that.
Got it. And sir, I think there was a strategic investor that has taken, like I'd seen there was a bulk deal by Frigerio Alana. There was a fund kind of a company, and I just saw that they are also into the same business. So could we
Yeah.
expect some kind of synergies, or like could they help us get more clients or something like that?
There is something going on. Dhruv.
Got it.
Yeah.
Got it. Okay. Thank you, sir.
How will the product mix look like 3-4 years down the line? Like from breads versus what you're doing currently, how will it shift from chicken to breads, naans, parathas? Will it be 50-50? What will it look like 3-4 years down the line?
So the bread line will grow at a much faster pace. But we can still say it's 50-50. We can still say it's 50-50 because we intend doing some very interesting things in chicken as well. We're trying to do some dough and chicken products also. Yeah.
Right.
And what is your R&D team strength currently? As in, do we require continuous R&D in the normal product, as you said, that tortillas and those products are easily saleable? But do we require constant upgradation to this base products, or like how does it work?
No, it has to be a continuous R&D. See, I mean, we can't just stick to a wheat tortilla. No, we would love to do corn tortillas. We love to do multigrain tortillas. We'd love to do spinach tortillas. So R&D always has to be on. I mean, you can't put a stop to R&D. You shouldn't put a stop to R&D.
And what is the strength currently?
We have 3 people as of now. So, R&D. Yeah.
And when you say the export market, what regions are we talking about? Is it Europe or North America, or like any specific regions do we have in mind?
So we have specific customers in mind. We don't have specific regions in mind.
Okay.
Because at the moment we're going to start with white label. We are not going to start our own brand sales, but we definitely will do that. But to begin with, that is something we would like to avoid for at least 1 year.
Okay. Anurag ji, any questions from your side?
No, I'm good. Thank you.
I think you've explained it very well, sir. Surabhi, do you have?
No, I think as of now I don't have. If we have in the future, I'll connect with you.
Sure. Thank you, Paramjit sir. You explained
Thank
it
you,
very well.
everybody.
Thank you so much.
Thank you so much,
I
sir.
hope all I explained made some sense. Thank you so much.
Of course.
Thank you so much.
I'll send you a summary of the entire whatever we've understood, and then
Okay.
just we'll connect more. If there are any changes, you just let me know.
Sure.
Thank you.
Thank you, guys.
you.
Thanks for
Thank
your
you,
time.
Sagar.
Thanks
Thank
a
you.
lot. Bye-bye.
Yeah.